What is going on, everybody? Welcome back to the channel. It is April 3rd, 2026, and the market is moving in a big way today. We have got Tesla getting absolutely hammered, down over 5%, while Intel, AMD, and Netflix are pushing higher with serious momentum. In the next 8 minutes I am going to break down all 5 of these names, give you the key technical levels you need to watch, tell you what is driving each move, and hand you a clear rating and 3-month price target for every single stock. Whether you are a swing trader, a long-term investor, or just trying to figure out what is happening in this market, stick with me because this is the video you need to see today. Let's get right into it. Alright, let's kick things off with the stock everyone is talking about today, Tesla. Tesla is down 5.42%, trading at $360.59, and the selling pressure is real. Volume is coming in at nearly 83 million shares against an average of about 69 million, so we are seeing elevated volume on a down day, and that is never a good sign for the bulls in the short term. Now let's talk technicals because this is where it gets really important. Tesla is currently sitting right on its 200-day simple moving average, which is also at $360.59, essentially the same price. This is a massive line in the sand. The 200-day SMA is the single most watched technical level for institutional money. If Tesla closes below this level convincingly, we could see a rapid move toward the 6-month low of $355.28, and after that, open air down toward the 320 to 330 range. The RSI is at 38.6, which means we are approaching oversold territory. Anything below 30 is considered oversold, so technically there is room to fall before buyers absolutely must step in. The 20-day SMA is at 383 and the 50-day SMA is at 403. Tesla is trading below both of those, which puts the stock in a clear short-term downtrend. Now the PE ratio here is eye-popping, 333. That is not a typo. For a company growing at the rate Tesla needs to grow to justify that valuation, any stumble in deliveries, margins, or sentiment can cause violent repricing. The 52-week high is 498 and we are now 38% below that peak. This stock has been under serious pressure. My 3-month price target is $340, and I am rating Tesla a hold here. I do not want to short it at the 200-day SMA support, but I am not confident enough to add aggressively until we see a confirmed bounce with volume. Watch that 355 level. If it breaks, cut exposure. Next up, let's talk about Intel, and this is one of the most interesting stories in the market right now. Intel is up 4.89% today, trading at $50.38, and the volume is absolutely screaming. We are looking at over 116 million shares traded versus an average of 99 million, a volume ratio of 1.18. When you get a big up day backed by above average volume like this, that is what technicians call a high conviction move. Let me walk you through the technical picture because Intel's chart has completely transformed over the past several months. The stock was trading as low as $17.67 on its 52-week low. Yes, that is not a misprint. Intel was near all-time lows. Fast forward to today and it is sitting at $50, which puts it right at its 200-day simple moving average of $50.38. Just like Tesla, this is a pivotal level, but unlike Tesla, Intel is approaching it from below with bullish momentum. The 20-day SMA is at 45.29 and the 50-day SMA is at 46.16. Intel is trading above both of those. The RSI is at 59.4, which is healthy. We are not yet overbought. Anything above 70 would concern me, so there is still upside room on a momentum basis. The 6-month low was 33.62 and we are now well above that, which tells me this recovery has legs. Now, Intel has no reported PE ratio right now because the company has not been generating consistent earnings. They have been in a massive restructuring phase. The new leadership, the foundry strategy, and potential government CHIPS Act funding are all catalysts that could re-rate this stock significantly higher if execution improves. My 3-month price target is $58, which would represent a move toward and possibly through the 52-week high of $54.60. I am rating Intel a buy with medium confidence. This is a turnaround story, higher risk, higher reward. Position size accordingly. Moving right along to one of my favorite names in the AI semiconductor space, Advanced Micro Devices, AMD. The stock is up 3.47% today, trading at $217.50. Volume is essentially right in line with its average at about 38 million shares, a volume ratio of exactly 1.0. That means this rally is not being driven by frantic speculation, it is a steady, orderly advance, and frankly that is more sustainable. The technicals on AMD are constructive. The 20-day SMA is at 202.73 and the 50-day SMA is at 211.64. AMD is trading above both of those moving averages. That is a bullish alignment. The RSI sits at 64.9 elevated, approaching overbought but not there yet. Room to run in the near term. Now AMD's 6-month range tells an interesting story. The low was 164.67 and the high was 264.33. We are currently right in the middle of that range, at 217.50. There is meaningful upside back toward recent highs if momentum continues. The 52-week low is a staggering $76.48. This stock has had a wild ride and the 52-week high is 267. So from an absolute standpoint, AMD is still well below its peak. The PE ratio is 83.3, expensive, but far more reasonable than Tesla, and justified for a company growing its AI GPU business at this pace. AMD's MI300 series chips have been gaining market share against Nvidia, and with data center spending showing no signs of slowing, AMD's revenue trajectory looks solid. My 3-month price target for AMD is $250, representing a move back toward the upper end of its 6-month range. I am rating AMD a buy with high confidence. This is my highest conviction call of the 5 stocks today. Strong chart, strong fundamentals, and strong secular tailwinds. Alright, let's talk Netflix. Netflix, which is up 3.25% today, trading at $98.66. Volume is coming in at about 37 million shares versus an average of nearly 40 million, so we are actually slightly below average volume on this up day. That is worth noting. The move is positive but not exactly a thunderous institutional accumulation signal. That said, the technical picture for Netflix looks solid. The 20-day SMA is at 94.66 and the 50-day SMA is at 88.17 and Netflix is comfortably above both of those levels. That is a bullish stacking of moving averages. The RSI is at 59.2, almost identical to Intel, which means we have healthy upward momentum without being stretched. The 200-day SMA is also sitting at 98.66, which is exactly where the stock is trading right now. So Netflix is right at this critical technical crossroads. The 6-month range goes from 75.86 on the low end to 124.14 on the high end. At 98.66, Netflix is in the lower half of that range, which actually gives me optimism. There is a lot of room to recover toward those highs. The 52-week high is 134.12. The PE ratio of 39 is reasonable for a high-quality growth company with Netflix's competitive moat. Password sharing crackdowns, advertising tier growth, and live sports content are all catalysts that continue to drive subscriber and revenue growth. Netflix is a fundamentally sound business. My 3-month price target is $115, with a move back toward the 120 range if market conditions cooperate. I am rating Netflix a buy with high confidence. It is a quality name, the chart is constructive, and the valuation is not stretched. And finally, our 5th stock of the day, Lucid Group, LCID. Now I want to be very upfront with you here. This is the highest risk name on our list today, and I want you to treat it as a speculative position only. LCID is up 4.18% today, trading at $9.96. But the volume tells an interesting story. Only 4 million shares traded versus an average of 5 million, giving us a volume ratio of just 0.8. So we actually have a below average volume day on an up move. That is not the most convincing setup. Let's look at the chart. The 20-day SMA is at $10.01, the stock is trading just barely below that level. The 50-day SMA is at 10.22, also just slightly above. The RSI is at 50.7, essentially neutral, right in the middle. There is no strong directional conviction from a momentum standpoint. What is striking about Lucid is the 52-week range. It went from a high of $33.70 all the way down to a low of $9.07. The stock has lost approximately 70% of its value from its 52-week peak. The 6-month high was $24.77 and the 6-month low was $9.15. We are sitting just 9 cents above that 6-month low right now. The stock is essentially bouncing along the bottom. Lucid has no earnings, no PE ratio, and is burning cash as it tries to scale production of its Air sedan and upcoming Gravity SUV. The Saudi sovereign wealth fund remains a key backer, which provides some runway, but this is a show-me story. They need to demonstrate production ramp and a path to profitability. My 3-month price target is $11.50, and I am rating it as speculative by meaning only risk what you can afford to lose completely. small position, tight stop below $9. This is not for conservative investors. And that is a wrap on today's top 5 stocks for April 3, 2026. Quick recap of our ratings. Tesla is a hold, watch the 200-day SMA closely. Intel is a buy, turnaround momentum is real. AMD is a buy with high conviction, my favorite name today. Netflix is a buy, quality compounder at a reasonable valuation. And Lucid is a speculative play only, small size, tight risk management. If you found this video valuable, please smash that like button, it genuinely helps this channel grow and helps me keep making free content for you every single day. Hit subscribe and turn on the bell notification so you never miss a daily market breakdown. Drop a comment below and tell me which stock you are most interested in, I read every single one. I will see you in the next video. Stay disciplined, manage your risk, and let's get this money.